Welcome back. The UAE has retained its position as having the Arab world's largest banking sector in terms of assets and deposits off the back of figures released by the central bank. The figures show that the total assets of the UAE's 23 banks and 28 foreign entities rose to just over 1.732 billion dirhams at the end of June, up from 1.725 billion at the end of May. The rise represented a rebound of 0.4% for June. Additionally, deposits grew by 1.6% to 1.1 billion dirhams, while advances rose by 1.5% to 1.09 billion dirhams. Business activity in the UAE's non-oil private sector rose slightly in July, according to the latest Purchasing Managers Survey. The HSBC UAE Purchasing Managers Index rose to 53.4 points last month from 53.2 in June from the 400 private sector firms surveyed. The survey measures the performance of the manufacturing and service sector in the country, where the 50 mark separates growth from contraction. Output growth fell marginally from 54.6 points in June to 53.7 in July, while new orders remained steady at 58.4 points. Additionally, the survey showed that employment growth in July across the non-oil private sector grew to the highest rate since April 2011. Etihad Cargo has posted a record 18% rise in figures for July, with network volumes approaching 33,000 tonnes from the same month last year. Total revenues for the division of Etihad Airways for the month were up 4% in June and 8% up from the period in 2011. Officials were quoted in Emirates news agency WAM as saying that they have seen a good recovery in business from Europe after the second quarter. They added that the addition of the 747-400 freighter has enhanced their overall schedule flexibility and helped support significant project work in what was also a record month for their charter team, as well as new routes. Dubai Investments PJSC, the largest investment company listed on the Dubai financial market, announced a profit of 171 million dirhams for the six-month period ending the 30th of June 2012 and a total income of 1.26 billion dirhams. With that, let's take a look at the stock indices across the GCC. Equities and higher yielding currencies closed the week in the green as the risk on trade was in full effect following a better than expected US jobs report on Friday. Meanwhile, following more promises and no concrete actions, the ECB disappointed and markets sold off. To gauge the movements for last week and this week, we earlier spoke with Gaurav Kashyap, the head of the DGCX desk at Al Pari Middle East.
It was a decisive week for the financial markets, and the one thing that we learned from last week's trading session is that the short squeeze rallies that we've been encountering in the euro over the past couple of months may start to be shorter lived than what they were during that time period. The reason we say this is because Thursday's session, although President Draghi failed to introduce any concrete measures, we saw a sell-off in the euro to below 121.50 levels. But then come Friday's session, we saw risk sentiment flooding back into the markets following a stellar US non-farm payroll figure. Now, technically, weakening data from the US has hinted to additional easing measures from the US, but since the data was so good on Friday, this will make the FOMC members more dovish. But although this should have strengthened the US dollar remained on the back foot as a result of this very positive risk on trade. So what this tells us is that the short selling squeezes will be a lot less likely going forward, and they will also last for a shorter time period. Going forward, we continue to watch the global growth story coming up. We continue to focus on numbers from China on Thursday, consumer price index, as well as retail sales from China. These are expected to come in line and slightly better than expected. And of course, from the UK, we have manufacturing and industrial production on Tuesday, which is expected to be well in the red, around -5.5%.